Beginners often assume that adding every available math tool makes them a better trader. They overload their screens with data until the whole setup looks like a chaotic Christmas tree. But price action is the actual road you are traveling on. Indicators are simply the GPS hints, like traffic or turn alerts, overlaid on top of it. You still have to watch the road first. We are going to strip away the noise. By the end of this video, you will build a clean, 3-tool setup designed to execute a strict confirmation checklist. Removing the visual clutter forces you to stop looking at math illusions and start reacting to what the market is actually doing right now. Step 1 is identifying the trend. Think of the trend like the current of a river. If the water flows downhill, trying to swim uphill against it is a waste of energy. We need to find the main direction of the flow. This chart shows Alphabet's daily price action, smoothed out by 2 common trend indicators. We have an orange 50-day moving average and a purple 200-day moving average tracking directly beneath the jagged daily candles. This chart shows the basic rule for identifying direction. When the green price candles break above the moving average line, you have an uptrend. When the red candles drop below it, you have a downtrend. But you must avoid the trap of buying the second the price touches the line. Look at this point at the bottom of the uptrend. You have to wait and combine the indicator with actual price action before making a move. Establishing the macro trend sets your baseline rule for survival. You never position a trade against the main current. Step 2 is measuring momentum. If the trend is the direction of a bicycle, momentum tells you how fast and hard the rider is pedaling. This chart shows the Relative Strength Index, or RSI. We configure it to flag specific extremes, marked here by an upper red zone for sell signals and a lower green zone for buy signals. When the orange RSI line crosses 70, buyers are getting tired. When it dips below 30, the market is exhausted from selling. This chart shows the MACD, an alternative momentum gauge. Watch where the blue and red lines intersect in the bottom panel. These bullish and bearish crossovers signal shifts in momentum strength. Keep in mind, hitting an overbought threshold doesn't mean the price will drop the very next second. It means the move is losing steam. Momentum is your fuel gauge. It tells you if the established trend has enough energy left to sustain its trajectory. Step 3 is checking the volume. Volume is the crowd noise in a stadium. If the crowd is deafening, something important is happening. You enable a volume indicator to see how many traders are actively participating. When a rising trend line pairs with a sudden spike in volume, the market is highly engaged. This chart shows a high volume confirmation. Notice how the large cluster of green volume spikes at the bottom aligns perfectly with the cup breakout on the main price graph. Conversely, if the price moves up but the volume bars stay flat and low, only a few traders are active. That move lacks support. Volume acts as the market's lie detector. If the crowd isn't backing the move, the breakout is likely a trap. Now we build the confirmation checklist. Confirmation means you never risk capital based on a single signal. You demand agreement across your tools. Step 1. Look at your moving averages to confirm the macro trend direction points the same way as your planned trade. Step 2. Check your RSI or MACD to confirm the momentum is strong and you aren't buying into an exhausted market. Step 3. Look at the bottom of the chart to confirm that high volume is actively supporting the price movement. Forcing all 3 of these indicators to agree filters out false signals. This strict alignment increases the mathematical probability of a profitable execution. Here is your completed professional-grade chart. On the left is the messy guesswork of an amateur. On the right, a minimal, readable system. The dividing line between gambling and professional trading is patience. You wait for the multi-point checklist to align. To understand the entry triggers once these indicators line up, you need to master price action. Proceed to our standalone technical analysis module on reading candlesticks next. Your trading edge does not come from putting the most data on your screen. It comes from having the discipline to wait for the clearest signals.